Welcome to Monday Night Live, the weekly training that guides professionals to financial prosperity. Join our community and let's start building your wealth.
So guys, Carlos Samaniego is on teaching tonight. I did interview Carlos on our podcast, which is why I invite him here, because it was an excellent podcast. And when it gets published, I definitely encourage you to watch it and promote it. Of course, it'll go all over the place, including YouTube. And we always like our YouTube followers to like and share, and on Facebook too, for that matter. But subscribe if you haven't subscribed. But in any case, Carlos, I'm going to let you do your introduction,
Yes.
because I think it works better, and I want people to get to know you here. So, guys, this is an excellent subject tonight. You will definitely learn from it, and stuff that you can use for yourselves, and more importantly, for your clients. So, really pay attention and take those. So, Carlos, go ahead and you got free reign. I'll between Andre and Eric and I, we'll manage the chat box for you. And do you like questions kind of in natural breaking points, or do you want us to hold them, or?
You know what? What I encourage you, as we're going through this, if you have a question or two, please start. Raise your hand, and maybe I can go. I can answer some while we're going, or we can just wait towards the end. The presentation is not going to be super long, so it gives us opportunities to ask more questions. Ask a lot of questions. So either way works. We'll just play it by ear how that works. So, and I'm going to make sure I can share my screen here. And let's do this here. PowerPoint presentation. Can you guys see the screen there? Yep, good to go. Okay, perfect. Well, you know what I'm going to do? I'm going to try something new here. I'm going to start my introduction by showing an animated cartoon. So let's just start there and just make sure. Give me a thumbs up, Gary, if you can hear the volume, okay? Because sometimes this kind of works weird.
Okay.
My name is Carlos Samaniego, and this is my story. They say that there are only two things certain in life: death and taxes. My journey involves both. As an EMT medic, working on an ambulance for over 11 years, I saw my fair share of death. A lump in your throat, smell of blood, the cries of loved ones in desperation. When people need help, their fear is palpable. Then one day, I lost my license to drive an ambulance. I was now 30-something in that jobless abyss of deciding what to do with my life. On top of that, I hadn't filed and paid my taxes in over 8 years. When I got engaged, I didn't even tell my fiance that the IRS was after me. Now, how does one become a tax evader and a scumbag all at the same time? It's easier than you think. Eventually, all my secrets came out. My mentor, Ernie, who had helped me with my tax problems, had suggested the strangest thing. He said I should consider solving tax problems as a career. Really? But there's so many more interesting things. In fact, I tried marketing, network marketing, real estate, and even becoming a minister. Anything but taxes. What hurt the most was my own son not being able to say what kind of work I actually did at his career day at school. You know, I was overworked, I was exhausted. Until one day, with my wife's blessing and Ernie's wisdom ringing in my ears, I decided to focus solely on the tax industry. I dedicated myself to training. I transformed myself from an unfocused opportunity dabbler to a true entrepreneur. I found Pronto Tax School, among others, who taught me the secrets of the tax game, and then became an enrolled agent licensed with the IRS, as well as becoming an author and a speaker. What a life-changing transformation to go from a tax evader to a tax problem solver for those in immense financial fear and pain. And I finally found my new career, my new calling. I realized I was back to the original passion, to help people face death and taxes. While death is inevitable, taxes don't have to be a mean to financial death. Now, if you're getting those unopened envelopes from the IRS and they're keeping you up at night, let me handle the IRS for you. so you can get back to a full night's sleep and living your best life. Let's write the next chapter of your story together. That's a little bit about who I am. And first of all, I want to thank Gary for inviting me to this presentation. And today we're literally going to talk about how to get the IRS off your client's back and look like a hero. And I'm going to start that with a story about this girl who had bought a house here in California, in Redlands, California. She actually bought this craftsman style home here in Redlands. And beautiful house. That's the young lady there that bought that house. She loved the house. It was this one of those 1998 or 1889 historic homes. She was in her 30s, just turned 30, wanted to buy a house. And when she met that young man, that man happened to be a lender. And I always tell people that, why it's so important for people in the real estate industry to kind of have a tool in their back pocket to be able to help your clients, because as a lender, you guys are that first wall, that first person that usually finds out about tax problems. And this is a situation where this young lady, she was in that process of buying this house, and when she bought this house, tax problems kind of popped up in her life. The person that she had met hadn't filed his taxes in 8 years. He wasn't a bad guy. He just got himself into a bad situation, didn't know what to do about it. Anybody here ever actually kind of started working on a deal, and as you're working on the deal, you end up finding out, and just raise your hand, you end up finding out the person didn't file a tax return, maybe had a tax lien on the property. It tends to happen. And that's kind of what happened with this. And these people are living that have these type of problems. They're living with the tax challenge. It affects them in so many different ways, other than being able to buy a house or their finances. It kind of creates a lot of stress. And we're going to talk more and more about that, because when people have these types of problems, one, they can't concentrate at work. They lose sleep at night. They're stressed out. They won't answer their phone because a lot of people are afraid, the IRS is going to be calling them. They're lost and confused, and most of these people never talk to anybody about this. I always kind of joke that, when you don't file your taxes for 8 years or owe 10, 15, 20, $100,000 in taxes, you don't necessarily go to your best friend and say, hey, I'm not filing my tax returns, right? What do I do? Or I owe money to the IRS. We tend to guard our privacy our financial privacy pretty closely. So, and as I mentioned, you as real estate professionals are usually those first people who are exposed to the problem about their tax problems. And going back to that love story, as that cartoon mentioned, you probably already know who that person was. That person was me. I was the person this young lady had met that had the tax problem. At the time, I was actually working as a lender at Chase Manhattan Mortgage. When I was working there, I had not filed my tax returns in years, over 8 years. And I still hadn't dealt with it completely. And to this day, I always find it amazing that Chase Mortgage, the lender, hadn't found out that I hadn't filed my taxes. I don't think that you can even get away with that, right? Nowadays, they pull credit reports looking for tax liens and things like that. They didn't back then, and that was me when I met this young lady. Obviously, the tax problem got solved. We ended up, when I was in the process of helping her buy the house, I had decided I did not want to help her with the house because I was interested into her much more personally. We ended up getting engaged a couple of years later, ended up having a family, and here's my son as a naval officer, on Veterans Day. So a lot has changed. She's actually the co-founder of the company that we actually founded. And this is me. I am an enrolled agent, as I mentioned earlier, licensed by the Department of Treasury.
So I actually have an actual license from the Department of Treasury to help people resolve taxes. We both co-founded this company back in 2016. Since then, I've been all over the place in terms of ABC, CBS, Fox News, Hollywood Live. I'm kind of the go-to person on Fox News when it comes down to dealing with tax problems or tax updates. They'll call me up on the whim. And if you guys ever did media, any type of media like that, they literally call you at the whim and say, hey, can you be on the air in 30 minutes to talk about something? So I've written multiple books about tax problems. So the big book that I made, and at the end of this webinar here, I'm going to give you an opportunity to actually pick up this book for free. It's How to Make the IRS an Offer They Can't Refuse, which is actually listed on Amazon. So here's what we're going to do today. We're going to actually talk about a few things. We're going to talk about how to beat up the bully, the 3 steps to solve any tax problems. I don't care if it's a $5,000 problem or $5 million problem. It's the same 3 steps to get any tax problem resolved. And then we're going to talk a couple of bonus tips for real estate people. One of the things I've seen over the last 10 years is a lot of self-employed people tend to get themselves in trouble with the IRS. So I'm going to give you some 3 basic tips, a few tips to help you kind of keep yourself out of trouble with the IRS, things that the IRS are looking for with self-employed people. You guys ready to roll? Any questions up until this point? Nope. All right. Let's talk about the bully. Who's the bully? Well, obviously the big bully that we're going to be talking about is the IRS. We're going to talk about how to end IRS intimidation once and for all. I tend to call the IRS the Kraken. You remember the Kraken was the beast that all sailors feared, right? If it came in, it was going to wipe you out. And the problem with this Kraken, January 1st of this year, 2024, the Kraken was released. And me and Gary kind of talked about this on our podcast, was the last 3.5 to 4 years, the IRS has been pretty much in shutdown mode, where the IRS stopped all collections, primarily because of COVID. You know, when COVID started, Congress kind of came to their senses, is that here, everybody, we're dealing with this pandemic. The last thing in the world that the world needs, or the U.S. Citizens need during a pandemic, is the IRS coming after them for past due taxes or unfiled tax returns. So the government did what they kind of forced a lot of consumers to do and businesses to do, is to shut down. They pretty much sent all the IRS agents back home. Some of them were actually working from home. All mail that was being mailed to the IRS during this time frame was literally being put in the storage boxes and put away. So if you know anybody, or you even personally had sent correspondence, maybe mailed tax returns, to this day, they're still trying to find stuff and have lost millions upon millions of documents. Just a couple of days ago, I was talking to a client. We noticed 3 years of returns that we had filed back like 2.5 years ago have never been processed. We called the IRS to find out, hey, these were mailed. We got confirmation you received them. They can't find them. So we're pretty sure they just got stored somewhere or lost somewhere. So what does the IRS say? Go ahead and resend those things to us and let us process. But here's the thing, guys. Even though it was mailed, even though we got confirmation that they got it, they're still charging them penalties and interest for all those months because it's never been processed. And the IRS is just like, too bad. There's not much we can really do about it. So if we're flash forwarding here to January 1st. January 1st of this year, the IRS basically was given orders. Everybody go back to work, go back into the IRS buildings and get back to work and restart the collection process to anybody that has unfiled taxes or past due tax balances. So literally the IRS has been sending millions of notices. They got the order at the beginning of the year. The notices really didn't start coming out until March. If you guys have ever seen, it's called a CP 504. It literally says final notice of levy. That is the notice that restarted all the collections for people with these past due tax problems. So millions of those notices went out starting in March. And just to kind of give you a quick update on what's happening in recent headline news, and you guys have probably seen this, U.S. courts are authorizing, has authorized the IRS to go after the identities of people using cryptocurrency. If you guys haven't noticed, when you filed your tax returns, it's literally on the front page of your tax return, just below your name. And I think I'm going to show you guys a little later. It literally has one question: have you bought, sold, traded, or gifted any digital asset or cryptocurrency this last year? The IRS is really cracking down on people having any type of digital assets and trying to collect on any tax that could be payable based on those digital assets. The IRS actually started going after high income taxpayers and are getting a visit. And this is something that just recently changed. When we originally did these slides, the IRS was authorizing IRS agents to go to people's homes. That changed about 8 months ago, actually. Somewhere down, I believe it was in Alabama, IRS agents showed up at somebody's house. Guess what happened? They ended up getting killed. So the IRS officially has orders that there is to be no more home visits for IRS agents. Now, what's actually happening now is that they're actually just being summons to their local IRS buildings. And I've already had a few of those summons for a few of my clients to show up at their local IRS buildings. The growing collection woes may haunt IRS for years after the pandemic ends. Obviously, we know the pandemic's ending and the IRS is behind. They're so behind, they've told us that they're going to start the levy process. Literally, they have to do it in waves because there's so many past due tax balances and unfiled tax returns that there's no possible way they could send everybody a notice that owes money, because then they're going to be overwhelmed and they don't have the capacity to go after people right now. I'm going to back up to this high income taxpayer. Can anybody here guess what the IRS considers a high income taxpayer?
400,000.
400,000? Higher? Anybody else higher or lower? Lower? Lisa's right. It's 100,000 combined income. Family of two.
That's good.
$100,000 is considered a high income for a family of two. So even though this says high income, it's not. When it comes down to collections, they consider $100,000 high income, which we all know that's nothing, right? Can barely get by nowadays from some of the places that we live. The IRS is ramping up audits on small business owners. The number one people that they like to audit are sole proprietor. Anybody running their business as a sole proprietorship? Most self-employed people are. That's basically, you're filing a Schedule C with your tax return. Those are the audits that are going to go through the roof. And we'll talk a little bit about how to protect yourself in that. And then obviously Biden got the $80 billion towards IRS enforcement. A lot of people have been saying that they believe because of the new administration that's coming in that they're going to take money away from the IRS. It is a possibility that probably I kind of foresee that some money is going to be taken away from the IRS and applied somewhere else. But again, you have to think about the federal government. Where does it get its money to actually spend from us, the taxpayers? So they're not going to take away too much. As of right now, there's 50 million taxpayers that owe the IRS roughly $1 trillion. The IRS is spending most of its money on 40% of their money on enforcement. Biden wants to hire 87,000 agents. The one thing about this 87,000 agents, guys, here's one. We were on a call with the commissioner quite a few months ago. The 87,000 agents are supposed to be over 10 years, and it's not agents. They're just employees. One thing the media didn't tell anybody that the IRS is expecting close to 40,000 of their current employees to retire. When we call the IRS, it's the funniest thing. It seems like every person I talk to has to be over 60, and every one of them are going to retire in the next 12 months. Every time I'm talking to them, I can't wait to get the hell out of here. So this 87,000 is literally total employees. And in fact, I believe he said like close to 10,000 were going to be like cleaners, office staff, just people that clean the buildings and things like that. And there's going to be obviously a good portion of that. There's going to be additional funding for IRS revenue officers and revenue agents. And those are the two types of people we got to avoid. Let's go here. Next one here, IRS has sent out over 100 million automated notices since 2024. There's 10 million people every year that do not file a tax return. Anybody know anybody that hasn't filed a tax return? I went 8 years, so it's a very common thing. You'll be shocked how many people who, they know they're going to owe a lot of money, just don't file the tax return because they know they're going to owe their money. Not realizing that not filing the tax return is the worst possible thing you can do. Not filing a tax return can be punishable up to 1 year in jail per tax return. So I always tell people, I get a lot of calls for people that haven't filed tax returns for 3, 4, 5, 10 years. And I say the most important thing to do is to get back into the system, because you don't want to get that letter from the IRS summons to the local office, and then now they start questioning you. Why haven't you been filing? And when you show up at that office building, you got to bring like all your financial documents, all your bank statements. If you own a home, all the documentation. They want everything about you. So 1 to 12 tax. Let's go back here. One out of 12 tax preparers currently have some type of IRS collections, and the majority of them were incorrect. Have a funny story on incorrect tax returns. I actually had a client that came to me. The IRS had a revenue officer, and if there's two things, you want to write this down. There's revenue officers, there's revenue agents. A revenue officer, their only job is to collect money that's due to them. So in other words, you got to pass due notice. You owe money to the IRS, and if you don't pay that, you can be assigned a revenue officer, and his job is to collect. I call them they're like the mafia hitmen that come after you. All they want is money. That's their only goal. There's also a revenue agent. A revenue agent, those are the auditors. Those are the ones that are trying to determine how much money you owe. So if you're a small business owner, you may get an audit on your business tax return. That auditor will determine whether that number that you put on there is correct. And if it's incorrect, they're going to come up with the number. And then that audit is over. Now you owe money. Well, if you don't pay the money, you can eventually be assigned a revenue agent, and his job is to figure out how to collect that money from you. So those are the two types of agents that we always talk about. Well, I had the situation with this taxpayer. The business owner came to me that they had a revenue agent that had been trying to collect close to $60,000 in taxes from them for a couple of years. And once they hired me, I actually went through all the records. I called the revenue agent, and the revenue agent kept on telling me, Carlos, I've been trying to get these people to just talk to me, and they keep on avoiding me, and I've taken money out of their bank account, but I honestly believe that there's some errors in the returns that they did. And the funny thing is that he said that to me because I told him, you're right, there were errors. And by the time we finished, the IRS actually owed the business over $30,000. So these incorrect tax returns happen all the time. So just because you get a balance due notice from the IRS, never take it at its face value that you owe the money.
Yep.
Any questions?
I had a nice surprise one year, Carlos, where it was like about $15,000 for a return 3 years prior.
Yeah.
Just out of the blue, I thought it was a scam. I got this email, and I thought, well, it looks legitimate, but people can mask email addresses, and I thought, well, I'm just going to call. And sure enough, the lady just said, no, this is legitimate. You got 3 checks coming for a total of about $15,000. I couldn't believe it. I thought, holy smokes, So, in any case, that was good. That's a good news story with the IRS.
Yeah, there's been many a times I've had revenue officers call me or basically saying, we're just trying to get a hold of these people because we don't even think the records are right, and we want to help them. And a very common scenario in this, actually, we're going to come into that. I'll wait. I'll tell that story here in a little bit. And another story I had, guys, I actually had a client that owed 50, actually, I'm gonna tell the story after I talk about this agency because it pertains to this next agency. So the IRS is actually the most brutal collection agency in the world, except for one exception. That exception is if you live in a state that has a state tax collection agency. Anybody here live in California? If you live in California, the state of California is about 100 times worse than the IRS. If you live in Illinois, Massachusetts, any state agency that has a tax agency, they will be 100% more aggressive than the IRS. And here's the reason why, guys, is that the IRS is really slow to do anything. And the IRS, the US government has the right to do what when it comes down to money? Anybody know? Print money? I think, Eric, I read your lips, Eric, right?
What do you want?
The government can print all the money it wants, and it's got money. The state agencies cannot print money. There's no possible way. So the only money that they have is literally through income tax, or if you're in a state that doesn't have income tax, right, property taxes or sales tax. That is their source of revenue. So they're going to be a hell of a lot more aggressive when it comes down to collecting taxes. And the story I was going to share with you, I actually had somebody from Hong Kong, this was a couple of months ago, call me up because he had $50,000 swiped from his bank account in Massachusetts. So he calls me up because he had gotten a letter from the California State Franchise Tax Board saying that he owed money, and they took $50,000 out of his bank account in Massachusetts. And here's the funny part, guys. This person has never been to the US, has never worked in the US, has no association with the US other than coming to school when he was in college. That's how he got a social security number. And he has relatives that lives in Massachusetts. Well, he opened up a bank account out there because he's a high income person. He puts money in that bank account to provide income for these relatives. State of California came in and swiped the money out of his bank account, 50 grand. He calls me saying, I don't know what's going on. Long story short, he hires me. I do my research. I contact the state of California and found out that they made a mistake. It was a mistaken identity that the state of California thought he was somebody that he wasn't and took $50,000 out of his bank account. The good news is within about 2 weeks, I was able to reverse the process, prove that we didn't owe the money, but it still was going to take him 6 months to get his money back. 50 grand gone, and he just has to sit and wait until he gets the money back. So don't believe any notice that you get that you owe money. Always double check it and confirm that you really owe that money.
They're tough, Carlos, in Pennsylvania. They at the state level, they'll come if you're behind, like at a business or something, they'll come to your business, and if they can't find you there, they'll come to your house.
They will. And Pennsylvania, I believe, is a state that does something that California, I know California does. If you don't file a tax return, here's a very common.
Oh, even if you do, though, but definitely if you don't, for sure.
Well, and here's where I was going to go with that is that.
But even like sales and use tax or
Absolutely.
unemployment tax or something stupid like that.
Well, here's the funny part. Well, it's not funny when it happens to you. You don't file a tax. If you don't file a tax return with like the IRS will literally create a tax return for you. It's called a substitution for return. And they basically use third-party information, maybe a W-2, a 1099 that you got to figure out a tax bill, right? Which makes sense. They got proof that you actually earned income. They're just going to file a tax return, no deductions, and then give you a tax bill. Here's what the state agencies do, especially in California. They will look at what was your last occupation. So let's just say you were a real estate agent in years past and you didn't file a tax return. Well, they'll just find out what was the average income for a real estate agent in your county. Base that, if it was $100,000, they're going to just assume you made $100,000, file the tax return for you, get you a tax bill, and then go after your bank account. And you may have never have worked as a real estate agent. I have multiple cases right now. I've got a bunch of real estate agents who are keeping their license active. They're not working as real estate agents, and the government is coming in and just assessing a tax bill for them based on a real estate salary, an average real estate income for that area. That's what these estate agencies will do to you. And today, right now, you got clients and friends who, right now, you have clients, friends, and family who have, let's go over here, living in fear, are being intimidated, and they need your help. And we're going to show you exactly how we're going to help these guys. So bottom line is what I'm going to teach you here, you're going to be able to be your client's hero, strengthen your bond with these clients, and able to increase your referrals. Because bottom line, guys, when you help your clients, whether it's buy a house or solve a problem or possibly even solve a tax problem, they're always going to remember you. And here's what we're going to do. We're going to talk about the 3 steps to solve any IRS tax problems. And if you want to write this down, these are just if you just remember these 3 steps, you'll probably remember this entire story when I go over it. One is our step 1. We're going to investigate the liability.
Hi, I just want to take a moment to thank you for watching a recording of the Monday Night Live class. Hope you're getting a lot out of it. I'm sure you will. I wanted to let you know that, you can come to Monday Night Live whenever you want, but you can also participate more with the team. Why don't you set up a call with me, a one-on-one strategy call? I can go over everything with you, show you everything that we have to offer. For example, did you know that on our team, not only do you get your leads, we actually give you your own account on our lead gen system. So this puts you in control. You're not waiting on somebody to hand you leads. You get to pick the ones you want. Okay. Huge difference. We have 21 of our own proprietary marketing campaigns. They're all copyright protected. We're the only ones that can use them. Okay. The coaching is absolutely one-on-one. We got 3 coaches. We even have a 4th success coach that we have access to. Okay. One of left fewer than 100 in the world. Okay. One-on-one coaching. Right now the big problem is volume. We need more transactions. We need more inventory. I get it. Well, we know how to get it. Our team actually outproduces the national average by more than 2 to 1. So if you're struggling, don't do that anymore. If you're a solo agent, if you're a team, let's just talk. Smart entrepreneurs are always open to discussion. Learn what we have to offer, and then you can make an informed decision about staying where you are or moving on. You've got to decide, if you're not where you want to be, you've got to take action to get where you want to be. Let's see how we can help you do that. I look forward to talking to you. Click on the link, set up a call. And by the way, I'll see you on the next Monday Night Live.
Step 2 to solve the problem is it's called compliance, and step 3 is the resolution. And we're going to dig a little bit deeper into these 3 steps. So let's pretend we got a client comes to you, you bump into him, he owes 50,000, could owe 100,000. I'm getting a whole bunch of people owing close to 250,000 right now. I deal with a lot of self-employed people. So here's what I'm going to do. Step 1, we're going to find out what the problem is. We're going to investigate the liability. Earlier I showed you the video where I was driving in an ambulance, right? I dealt with medical emergencies for 11 years of my life. And one thing I know about medical emergency guys is that when there's a medical emergency, or you go to your doctor, or you're not feeling too good, what's the first thing the doctor wants to do? He wants to do a physical, right? He wants to get your blood, labs, and x-rays. If you got, a really bad stomach pain or extreme headache, and you call your doctor, he doesn't say come in next week for brain surgery or come in next week so we can open up your stomach to see what's going on. That would be malpractice. Same with the tax problem. You never want to jump into trying to resolve a tax issue until you know what you're actually dealing with. And that's what we call the investigation of liability. So what I end up doing, talking to a client. We file the power of attorney for the client. That way they don't have to talk to the IRS anymore. And then here's what I'm going to do. I'm going to be able to pull all the internal records from the IRS. I'm going to be able to find out what tax returns were filed, what tax returns weren't filed, what notices have they gotten, where are they in the collection cycle with the IRS? Are they at the beginning of the collection cycle, or is the IRS getting ready to levy a bank account or do a wage garnishment? Has the IRS filed tax liens on the properties that they own? CSED, you see that bottom word, right? If you write down CSED, It's called collection statute expiration date. Here's what that basically means. When does the tax debt expire? Tax debt actually expires. Let me share a story with you. I actually had a movie producer here in Hollywood reach out to me. This was a couple of years ago. He reached out to me. He had close to $500,000 of tax debt. And when he hired me and I did this investigation, I saw something that close to 80% of this tax debt was going to be wiped out in 6 months, like disappear, drop off the face of the planet. Because tax debt does expire after 10 years of when that was assessed. So when I talked to him, I said, Mr. Hollywood, I'll just call him Mr. Hollywood, I can't say his name. Mr. Hollywood, here's what we're going to do. We're doing nothing for the next 6 months. And he actually got pissed off at me. He's all, I paid you all this money to do nothing. I said, you don't understand. Most of your tax debt's going to drop off. It's going to expire. And if we do anything during this time frame other than monitor what's going on and maybe jumping in if the IRS were going to come after your bank accounts, our best step is just to do nothing and let that tax debt expire. And guess what happened? We literally sat back, we waited, I monitored his situation. The IRS didn't come after him, didn't try to do any bank levies, and that tax debt literally got wiped off.
And what's the time frame again, Carlos?
It's 10 years from when the tax debt is assessed.
Okay.
So basically, you have to file the return, right? Well, a couple things. It has to be filed. Either the tax return has to be filed, or remember I talked about the substitute for return where the IRS filed the return on your behalf? They actually count that as well. So if the IRS filed the tax return, it's 10 years from when the IRS filed the tax return. Or if it's when you filed the tax return, it's from 10 years when you filed the tax return. And when I pull the records, the actual date is right on the records that I'm looking at. It tells me the actual date it's going to expire. In fact, I got a guy right now. He's actually a real estate agent. We've been working with the revenue officer, and I had told him, I said, hey, we needed, there was a certain strategy. We need to do this strategy because you got $60,000 of debt expiring on December 5th. And he called me the other day. He's like, hey, Carlos, is that still going to happen? It's happening on December 5th. So there's strategy behind when these tax debts do expire. You see where it says wage and income? A lot of times we have people that haven't filed tax returns in years. And they're like, Carlos, how am I going to get all my W-2s, 1099s, my 1099 interest? How do I get all that? Well, the IRS keeps the last 10 years on record. So I'm able to pull those records and we can get copies of everything, and it assists us with filing the tax returns that need to be filed. So bottom line, step one, that investigation of liability to me is the most important step, because this step, it's going to give me a big picture of what's going on, what's the IRS done, and then I can come up with a good game plan on what is the best way to resolve all this. Just like a doctor, when he gets that blood labs and x-rays, he has a better idea of what's going on in the medical problem and the best way to treat that medical problem going forward. Same thing with what we're doing, the investigation. That investigation enables me to kind of come up with the game plan. Let's go. Create that game plan, because the next step two, compliance. Let's talk a little bit about compliance. Bottom line, right? 6 years. The IRS require what they consider compliant for any taxpayer. The last 6 years of tax returns have to be filed. I'm going to share a story with you earlier when I had somebody that had way, if I remember right, it was 18, 19 years, way more than 10 years of tax returns that had not been filed. And a lot of people will think, well, if I got 10 years of tax returns unfiled or 20 years of tax returns unfiled, there's no way I'm going to be able to file those tax returns. Here's the good news, guys. IRS doesn't want all those. They just want the last 6 years. That's all they want. If you have less than 6 years, maybe you haven't filed in 3 years, then you just got to file your 3 years of tax returns. But that's the most important part, because if you have a tax problem and you owe the IRS money right now and you call the IRS and say, hey, I want to come up with the solution, but you hadn't filed your tax returns, whether it's 2 or 10, they're going to say, sorry, chump, we can't help you. You need to get compliant. That's the word that they use. So we get the client tax compliant going forward. Now, here's something that's unique. Karen, you're in Pennsylvania, which is state income tax. I always say the state, again, they're 1,000 times more aggressive. I always go to the state and just say, what tax returns do you want filed? Because they don't have a limit. It's just what returns do you want filed? California has once made me, I had 15 years of tax returns to do for California. And actually, I'm going to come back to the IRS here. I just said the IRS wants 6 years, but here's the thing. If you have older returns that are older than 6 years and you file a return that puts you in a better position to replace a return that maybe they did, you're allowed to do that. So all the IRS requires is 6 years, but for example, if you have a client that had 10 years of returns and the IRS created these fake returns on these older years, you're allowed to file an original return to replace that old return, especially if it puts you in a better spot.
Okay.
As I just talked about here, must be 6 years. And the other thing is that you have to be paying, the second part of compliance is that you have to be paying taxes through your W-2s or estimated taxes. That's their two-part series of what a compliance is. I always tell people, and we brought this up, Gary, on our podcast, to the IRS, the most important tax bill is not the old taxes. You know what the most important tax bill is? Anybody?
Current tax.
Current tax. They want to make sure that you're not going to owe taxes again next year. So when I have somebody come in, I just had somebody, hey, Carlos, should I be paying my 2012 tax bill? I said, no. Here's what I want you to be paying. Your 2025 estimated tax payments coming up. That's the tax bill I want you to be paying. Because I want to be able to go to the IRS, because that's the first thing they ask me. What are they doing now not to have future tax bills? And that's basically making sure that you got your withholdings or you're paying your estimated taxes going forward. We want to make sure that you don't owe more taxes in the future. Once we know you're doing that, then we'll go deal with your past due tax problems. Talking about unfiled tax returns. Bottom line, guys, the IRS's #1 initiative this year, probably for the next 5 years, is going to be going after non-filers. If you know anybody that's a non-filer, the most important thing, they got to get back into the system. I found out that almost it looks like, and it's starting to happen, that all the non-filers are automatically being assigned revenue officers right now. In other words, they're calling you into they're calling you into their local office, telling you need to bring all your financial documents because we're going to sit down here and figure out why you haven't been filing and file these tax returns. And it's also, again, punishable up to 1 year, 1 year in jail for every year of non-filing that you have.
Hey, Carlos, would that be the case even for people who would be eligible for refunds?
Yeah, no, the
On
chances,
an annual basis?
the chances of you going to jail for not filing and getting an annual refund are slim to none. But you're still
I just thought I'd ask.
Yeah. A lot of people don't realize that you only got 3 years to collect a refund. So
Yeah.
I actually had a client, actually we're going to show her here a little bit, where multiple years of unfiled tax return, she had lost like $50,000 in refunds because she never filed a return.
Mhm.
So
Yeah, I just figured if you weren't paying and you were supposed to receive money back, then, really it's on you to not do it. I mean, why would they punish you for not collecting your money?
yeah, well, at the same time, IRS doesn't know you have a refund until you're filing the tax return.
Right.
That's their whole thing. They don't know until you file the return.
Right.
So, here's my unfiled case return. This is a great case study. Had a taxpayer, she came to me, hadn't filed a tax return since 2002. She had 16 years of unfiled tax returns. And basically, she did not know what to do, which is very common. You know, I haven't filed in 16 years. I don't know what to do. Where do I even go? How do I even start? And the IRS had actually prepared those substitute for returns for her. She had $436,000 of tax bills, which included penalties and interest. She had liens, she had levies over the years, she had wage garnishments. By the time we filed the tax returns for her, we were able not only to protect the client, but we found out that she only owed $5,849. That was her actual tax bill by the time we finished. And all that money the IRS was collecting from her, from liens and levies and wage garnishments, were gone. Because you only got a couple of years to collect that money back by proving that you didn't owe the money. So because the IRS had no idea, you know, because she didn't file, they have no idea of what deductions you have if you had dependents, if you were married. They have none of that information. That's why it's so important to actually file the return.
Yeah. There's something else I witnessed lately. There's an old client of mine. I mean, I don't directly serve clients anymore, but we became friends. A lot of us became friends, and he owned several businesses, he and his wife, and they had a bookkeeper and a tax and accountant. Well, the bookkeeper left them with the job of collecting all their information, providing to the tax preparer, the tax accountant. And they got behind, so they missed the September 15th deadline. They did the extension, but they missed the deadline. The problem is they were looking to buy into the property, and their lender they've been using for years, they were just going to get a line of credit on their existing portfolio, which is common practice. The lender said, "Look, we've known you a long time, but we're prohibited from giving you a loan because you haven't filed your latest tax return."
Yeah.
And they called me, "What can we do? Can we get a hard money loan?" I said, "I wouldn't do that. Just file your return." I said, "Just file what you have. You
Right.
can amend it later." But did I do the right thing? Tell them just file what they have and
File
get
what
it
you
done?
have. You know,
Or
no, that's absolutely the right
okay,
thing. File what you got. You always have the right to an amended return.
right.
You know, take the information, do your best to do as a most accurate, complete tax return. But yeah, just file. Filing is so important. Again, to the IRS, that's the worst possible thing for you to do is not file. You know,
Yeah.
Wesley Snipes went to jail. Remember that action start? He owed millions of dollars. He didn't go to jail for the millions of dollars that he owed. He went to jail for not filing his tax returns. That's what he went
Right.
to jail for.
Yeah.
And we're going to see a lot more. I guarantee going over the next few years, we're going to see a lot more of jail filings for non-filing of tax returns because the IRS has just made it such a big initiative. And I start to think that it used to be primarily celebrities or high-profile people. I think the IRS is going to start going after a lot of small business owners because it's just so prevalent of the non-filing. 11 million people a year are not filing their tax returns right now with the IRS. That's kind of my
How
specialty
many?
is dealing with non-filing because I just understand how it works so deeply.
Yeah. How
Are you
many?
talking
How many
on the
tax
federal
returns?
level or just in general?
Say that again, Karen.
I said, are you talking on the federal level or just in general, small businesses? Are you talking federal, state? You're talking about the whole enchilada?
Just everybody. The states are even worse when it comes down to non-filing. Again, because they're moving faster to collect. Why is the
Right.
state going to move faster? Because they want to get in front of the IRS. They know the
Right.
IRS is going to come after them, so they want to get their money before the IRS gets their money.
Yeah, they seem to be a little bit more like bloodhounds.
Yeah. You had a question, Gary?
Hey, Carlos, just out of curiosity, yeah. At the federal level, do you have any idea how many tax returns are filed annually? Like legitimately should be filed annually?
You know what? They
I
actually
know
do a
there's
report. They
130
do a
million people in
report
the
every
country.
year. It's 200 million plus. It's a lot.
Yeah.
Yeah,
Well,
it's
still
a lot.
11 million, that's 5%. Yeah.
Yeah.
It's five. I mean, it's 1 out of 20 people aren't filing. That's so I can see why they're. I mean, believe me, I'm not supporting. I'm not defending the IRS, but I guess I can see why they have to do this. I mean, if 1 out of 20, that
Yeah,
that can
it's
stack
quite a
up.
bit. So
Yeah.
here we are at step 3. So we talked about we investigate the problem to find out what's the game plan. 2, once we know what the game plan is going to be, we got to get the clients compliant, right? File the tax returns. Now, once we file the tax returns, now we have a real idea of what the problem is. I've had situations where people come to me because they hadn't filed in years, and we find out after we file the tax returns, they don't even have a tax problem. As I showed you earlier, it was almost $500,000. It was less than $5,000. That's not really that big of a tax problem, right? That's a small installment agreement. You're done. But for some people, once you file all those returns, we got to find a solution for the possible tax problem, and that's what we call the resolution. How do we deal with the balance due? There's three major things that we can actually do. Technically, there's four. I'll give you the fourth one here. First one is an installment agreement. Basically, if your tax bill is small enough and you have enough resources to pay back the IRS, we get you into an installment agreement. That way we can stop the IRS from coming after you, from going after your bank accounts, right? There's a subcategory within the installment agreement. It's called a partial pay installment agreement. So maybe you can't afford the entire monthly bill that the IRS wants because based on the past due balance, and maybe you can afford a smaller amount based on your income and your expenses. And that's something the IRS does care about. They really do care about what your income is, what your actual expenses are to a certain limit. You know, I literally have a guy that owes the IRS $250,000, hadn't paid in 10 years, and he went and bought a McLaren. Anybody know what a McLaren is? I had no clue what a McLaren.
Very nice car.
I just saw it on the vehicle. It said McLaren 2024, $2,800 a month. I don't know nothing about cars. My wife saw he bought a McLaren. She knew more about cars, and I literally called it up. I literally looked it up, and I'm like, "Holy damn, he bought that car!" So I was talking to the IRS agent, and he's like, "Is this guy an idiot? He owes us $250,000, and he went and bought a McLaren 4 months ago." The IRS told me he was going to force him to sell it. I ended up calling the guy back up. I'm like, "Dude, what were you thinking?" He literally said out of his own mouth, "Yeah, I was an idiot. I got it no money down, and yeah." So, but again, step one, installment agreement, partial pay installment agreement. So, partial pay installment agreement, they're going to look at your income and your expenses, and they allow you certain allowable expenses, not McLaren car payments, but they will allow you certain expenses. And maybe you're in an installment agreement. The other option is like an offer and compromise. That's what we all hear on the radio, right? Settle for pennies on the dollar with the IRS. Yes, the IRS does that, but they're very limited and they're very strict, and they take up to 18 months to complete. I've had $300,000 tax bills settled for less than $5,000. I've had $150,000 tax bills settled for less than $1,000. It's possible, but really the IRS is looking at, you better not have any assets and you better not have enough income to pay off the tax debt. But that is a possibility. And the other powerful possibility is the third one there. It's called currently not collectible. If your tax bill is so high and your income is a certain amount and your expenses exceed your income, the IRS can put you in what's called a currently not collectible status. And that's basically the IRS says, you don't have the ability to pay us right now, so we're not even going to bother to collect from you. The good news about that is that ticking time clock with the IRS of the debt expiring continues to tick down. So sometimes that's a strategy, especially, let's just say, a perfect example would be client has an income, their expenses, there's no way they can pay their tax bill, but maybe they own property. Maybe they own a house and they have some asset or some equity there. The IRS is not going to force them to sell their house. So that's a perfect example where a currently not collectible might be an ideal situation.
So Carlos, does that currently not collectible go against that 10 years?
It absolutely does.
Okay, so it actually starts coming off that 10 years, like as time.
Absolutely. So sometimes I'll see that. Sometimes I'll see somebody, "Oh, you got debt that's going to expire in 12 months, right?" And I'm like, you know what? Let's just get you in a not collectible status and let that time clock get closer to that 12 months.
And then you just let them forget about it.
You let the IRS let it get wiped out. That is an actual strategy that we use.
Okay.
That's why that investigation is so important, because we need to know, when is that tax debt going to expire?
Right. So if you've had it like for a year or two or whatever, and then they haven't bothered with you for a
Right.
while, then you might just kind of forget about it for kind of on
Exactly.
purpose.
No, there's a strategy. There's a strategy behind that. And the
Okay.
IRS knows, like that one guy I was talking about, we have debt expiring December 5th. That revenue officer knew what I was doing.
Yeah.
He knew that I was trying to delay because he knew that debt was going to expire. There was nothing he could do about it. He was just trying to collect as much as he can before that expiration date. So,
And if you do have the ability to pay and you're able to negotiate with them a lesser balance, generally, what percentage? Is there a percentage
No.
amount? No. Okay.
that would be an offer in compromise. There is no percentage thing. It's a very strict calculation based on how much money is left over after your expenses and what your asset value is.
Okay,
anybody-
so they'll determine that with you at that time, and that's
and
that.
usually I determine that. That's why I want to look at those numbers before we present that to the IRS. Because there's a possibility that we can increase your expenses legally.
Yeah.
So, and kind of a classic example where I actually did that. I actually had a stockbroker in San Francisco. He had like $600 of what we call leftover income, right? Residual income. Well, the IRS would take that $600, multiply it by 12. That's $7,200. That would be included in the offer and compromise, right? A minimum of $7,200. Well, when I was looking at his finances, I'm like, you don't have a car, and he's like, no, and he's all, I'm like, how do you get around? He goes, I live in San Francisco. I use Uber and transportation. I said, do you want a car? And he goes, I can buy one. I said, go get a car that wipes out that $600 a month. That's exactly what he did. So we were able to do an offer and compromise with him because of that. So again, we're looking at the finances to determine the strategy there. The final step, I know we're getting close, top of the hour here. The final one that's not on here, number 4, is bankruptcy. You can bankrupt tax debt. Very strict rules on it. The tax debt needs to be at least 3 years old. So you can't. I had somebody that hadn't filed tax returns in years, and he said, I'm just going to file all the tax returns at one time and then claim bankruptcy. You can't do that. The tax returns have to be minimum 3 years old before it's even a possible consideration. So, but that is a possibility. All right, let's just keep on going here. And again,
So if somebody files, I have a question. So if somebody files bankruptcy, then they'll forgive the debt?
wipe out the debt. Yes.
Only if
Is
the
that
taxes have
after
been
the
filed
debt?
for 3 years.
After the debt, so let's say they file bankruptcy and then they're assessed these fees. If somebody's able to show that they actually filed bankruptcy within an X period of time, they'll let it go, or what?
All the tax debt has to be at least 3 years old. At least 3 years old.
Okay, so
as an
new
example-
tax debt. What
Yeah,
about
so
new
as
tax?
an example, let's say we're in 2024 right now, right? Any taxes from 2024, 2023, 2022 would not be eligible for bankruptcy. But let's just say you have older tax debt from those past years. Those tax debts could be eligible for bankruptcy.
Okay.
2021 and older would be eligible for bankruptcy.
Oh, okay. So older, so
Older.
more than 3 years.
Yes. Here's a nuance thing.
Okay. And nothing newer. So like, let's say somebody filed bankruptcy today,
Right.
then a new debt would not.
No, yeah,
No.
that
Okay.
doesn't work. Yeah.
Gotcha.
So all these options I just gave you, our bottom line come down to your ability to pay, your income, your expenses, and your asset equity. So I always tell
Gotcha.
people, like, the most common question we always get, can you negotiate my tax debt? Basically, the pennies on the dollar thing.
Yeah.
The first question I ask every client that calls me is one question. You guys as real estate agents will understand this. I ask, do you own a home? Let's just say they say yes. Do you have equity? Well, yeah. How much equity do you think you have? Let's just say they say $100,000. Okay. How much is your tax debt? 60. You're not getting an offer in compromise. The IRS would rather just put a tax lien on your property and wait. So that's what asset equity is. So that the bottom line, this is what they're looking at to determine what you qualify over here. Okay.
Okay, that was one of my questions, was why wouldn't they just put a tax lien on the property?
Exactly, they will. If you have equity in a property, they're gonna put a tax lien on the property. Absolutely.
Okay, the other question I had, Carlos, was, is there ever a time where it's not required to file taxes?
Yeah, if you make, I'm trying to think, if you're single, if you're single and earn under $12,000 of earned income, like a W-2 job, you're not required to file an income tax return. If
So
you're,
they won't create a tax return for somebody like that?
they typically do not. Here's what I always tell people, even if you don't qualify, even if you qualify not to file a tax return, file a tax return. I already kind of explained multiple times where the IRS just made something up based on just
Yeah.
fake records, right? So always file a tax return. Like, I'll give you a perfect example. My mom only gets Social Security. Most people that only get Social Security do not need to file a tax return. I still file her tax return every year because I don't want somehow the IRS to get her confused with somebody else or something to happen where they come back saying, oh, she owes $100,000, and it's like a mixed up identity thing. So file a tax return no matter what.
Yeah, I asked because I can't convince my grandson
Yeah.
to file tax returns because he hasn't owed, and he won't do it.
Yeah, that's really dangerous. And here's something else, guys. If you make more than $600 in self-employment income, $600 net profit, you're required to file a tax return. I had somebody just recently, well, I sell real estate. I only sold two properties. I made like $10,000 in commission. I don't need to file a tax return. Yeah, you do. So, a quick case study here. My client, I had a client, he was self-employed, owed the IRS $463,000. He hadn't filed or paid any estimated taxes for years. He came to me when the IRS was getting ready to levy the bank account. We submitted an offer in compromise, and after I reviewed all the paperwork, we actually settled it for $57.69. That's full payment. So
Nice.
those things do exist. Any questions there? And Gary, make sure I'm staying on time here. We're coming close to the end here.
Yep. We're okay. I normally stay. Yeah, I
Go
normally
ahead.
stay after like till 8:30 or something, and we're okay.
Okay, perfect. So far we learned about the IRS, how bad they are and what they're doing. And you literally you guys know 99% more about solving someone's tax problem than the entire country. And it's just 3 steps. We got to know what the problem is. We got to get compliant. And then once we're compliant, we need to figure out your ability to pay or not pay to determine what's your resolution. That's how we solve these problems. And again, I said at the beginning, I don't care if it's a $5,000 problem or a $5 million problem. It's the same 3 steps over and over again.
Hey, Carlos,
Yes,
how hard is it to become an enrolled agent?
it's a tough exam. It took me quite a few times to kind of explain. Let me explain what enrolled agent, guys. There's only 3 people in the country that are allowed to solve tax problems. Attorneys, not tax attorneys, but attorneys. But 99% of attorneys do not deal with tax problems. CPAs are allowed to do this type of work and represent taxpayers. 97% of CPAs don't do this type of work at all. They just don't. In fact, I would say most of my referrals come from CPAs. And the last qualified people to do this, legally do this, are enrolled agents. Enrolled agents are licensed by the IRS, and to become an enrolled agent, it's a 3-part exam that basically it's a 4-hour exam, 3 4-hour exams that you have to take. They're tough. One of the exams, I think is exam 2, it took me 3 times to pass it. That's how tough they are. But it took me a while to do it. My son, actually, when he got out of the Navy, he actually went to work. He did it in 6 months. It took me almost 2 years. So it just depends how good you are at studying. So
I
let's
just
talk.
heard somebody that was interested in doing taxes, and they were talking about going back to school.
Yeah.
And I'm just wondering whether this wouldn't be simpler, quicker.
Yeah, it just, you gotta put in time, just like the real estate exam, you gotta put in time. Same with this, you just gotta put the time in. So
Of course.
let's
Thank
talk a little bit about, so we talked about tax problems, give you guys a few tips for yourselves to, regarding to the IRS. Commissions paid. A lot of people do not realize that commissions paid to you, like, let's just say you partner up with somebody, Karen partners up with Eric, and then Karen actually physically pays that commission. Sometimes the broker does all this stuff, so it's not before you even get paid, so it might not be an expense, but if you're doing it outside of that window, that your commissions that you pay somebody else are a deduction to you. I've seen multiple cases, clients here in California that they were paying other agents commissions and they weren't taking that deduction. Also important to understand that if you issue a 1099 to you have to issue a 1099 anybody that you pay more than $600. So whether it's an assistant, anybody, if you pay $600 or more, you need to issue a 1099. The IRS is really cracking down on this. They're getting tired of the cash economy that's happening out there, and they're trying to keep track of all the money that's being paid out. So that's a big one. Biggest deduction miss. It's like every single one of my real estate clients are miles. They are not deducting their miles. That is your biggest deduction that you have on a tax return. It's also the biggest audited item you have on a tax return. So what I recommend is picking up mileiq.com. Anybody here use it already? MileIQ. Go look it up. It will literally track all your driving automatically. You don't have to turn it on. It just tracks all your driving. And all you do is swipe right if it's business and left if it's personal. That's all you got to do. And then you have a fully IRS report for your tax returns and keeping track of all your deductions for your car.
Well, that right there is just worth its weight in gold.
Yeah, and I think it's like $60 a year, the last time I checked.
Huh.
Which is a tax deduction, right? It's a bargain. And almost every one of my real estate agents that's come to me, they're always getting audited for their miles. And the IRS knows because nobody does a good job tracking these miles. So this app will do it for you.
That's great.
Any type of education, coaching, training, keep track of that. A lot of you guys are in mastermind groups or do any type of training or coaching. Keep track of those costs. That's all a tax deduction for you. Marketing and advertising expense. I don't know if you guys do social media marketing, Facebook advertising, anything like that. It's all a huge tax deduction. Here's that little link I shared with you. This was on the 21. It's been on every year since 2021. You see, did you receive, sell, exchange, or otherwise dispose of any financial currency? That word has actually been turned into digital assets. The IRS is tracking crypto and going after people that do not report their cryptocurrencies. And I mentioned earlier this book here, How to Make the IRS an Offer They Can't Refuse. You can pick up that book for free at taxdebtbook.com. You will get a PDF version of this book. And if you want a physical version, anybody on this call, just shoot me an email and I will send you a physical version of this book. No cost. Just send it to me. So you can get the digital one or the physical one. That's only to Gary Wilson's people. Taxdebtbook.com. And if you want my contact information, if you scan that on your screen there, it'll give you my digital asset card, my business card on your phone. And follow me on YouTube, taxdebttv.com down there. And I'm so close to 1,000 followers on my YouTube channel. So anybody that goes to Tax Debt TV, I truly appreciate subscribe to the channel. And I do updates of things that are going on with the IRS on a regular basis. And that's it. Any questions?
Can you go back to your QR code, please?
Oh, yeah. Sorry about that.
It's okay.
Let's go. QR code.
By the time I got my QR code up, you were gone.
Oh, no problem.
Sorry.
There you go.
Thank you.
Yeah.
Gotcha.
Thank you, Carlos. This has been really interesting.
Thank you guys. Yeah, you know what? This is going to become a huge, and that's when me and Gary were talking on the podcast. This is just going to become a huge issue over the next couple of years, probably for the next 3 or 4 years. It's going to get really bad. August 15th was really a big date for us. That was a date the IRS sent out letter 11s. If you want to write that down, letter 11. If you happen to know anybody that gets an IRS notice, in the top right corner, it literally will say LT 11. This is the one IRS letter you cannot afford to ignore. All the other ones, you can literally do what all our clients have done, is throw them in the trash can, stuck them in a drawer, just ignore them. You cannot ignore this letter 11. The letter 11 is basically giving you, it's a hard 30-day deadline. It's 30 days. If you do not do something in 30 days, we will take money out of your bank account and we will go after a wage garnishment. A lot of people don't realize if you got 1099 income, self-employment income, they can take 100% of that. On W-2, yeah, 100%. On W-2 income, like paycheck income, they can only go up to 25-30% max. But on 1099 income, I actually had a real estate broker just recently. They sent a levy to the broker, and they took 100% of the commission, sent it to the IRS.
Carlos,
Yes.
can I bug you to go back again? Because it didn't take it for some reason. I'm really sorry.
Oh, no problem. You can continue to ask questions if you have questions.
I'll just keep asking you to go back to that.
Let's go back.
Just kidding.
There it is. Let's see.
It's like Vuja Day all over again. Hey, Carlos, once you have that, we
Can
do
we
have
go
some
back to that
chats.
to that
If I could
stand?
please, real quick, Carlos, once you have that up, if we could, we do have some chats in the chat box we have to
Oh,
get
yeah.
to here. So
Sure.
you can, if you click on the chat, you'll see them going back.
Oh,
One
okay.
guy's,
I'm sorry.
Yeah.
Let me go look at my. Oh, there's 12 questions there.
Okay, there we go.
Sounds
Thank
good.
you.
Yes. Okay, I'm a vet. Thank you for your service. Contractor did not file. That stinks. Oregon is brutal. Yes. Thanks for the insurance info. Is there time situation? That was Catherine. Yeah, does not need to file.
Gotcha.
As I mentioned earlier, Catherine, yeah, there are situations where you don't need to file if you don't have taxable income, typically Social Security income only. But again, my recommendation is to always file and never throw away tax returns. Sometimes I get that question all the time. How long should I keep my tax return? Forever. You don't want to be in that situation where 10 years down the road, 8 years down the road, the IRS comes back and says, you owe us $50,000 for 2019. You don't want to be in that situation because then the burden goes on you why you don't owe the money. Gotta run. Thank you. Can I make 500 multiple times, get credit 6. These are addresses for the book. Here's what I'll do, guys. I'm just gonna throw my email address on here and just send me, it's Carlos at Tax Debt Consultant. If you send me an email and just put book in the subject line, I'll definitely send you the book. Is it better to lease or buy a car for tax purposes? That could be a 1-hour conversation analyzing the situation. It just depends.
and then Jay had a question. I'll answer this, Jay. So for your client looking for financing, you know, you could talk to Dutch or Eric, and they might be able to give you some suggestions there. I think Dutch was on earlier. Eric's on now, but you don't have a lot of time to work with there. It doesn't look like. But it's probably going to be hard money, which means it's going to be pretty hard terms. So, but yeah, talk to Eric or Dutch, and they might be able to come up with a resource for you. You know. So
No, a question somebody had asked me. You guys didn't ask, but it was another real estate agent. If there's a lien on the property, can the house still be sold or refinanced? Yes, the IRS will. The McLaren guy actually, after talking with him, he had like $500,000 of equity in his property. he decided just to sell the property, and he has tax liens. And he thought that the IRS wasn't going to allow him to sell the house. The IRS will 100% allow him to sell the house. All we got to do is get escrow instructions stating that the entire tax bill is going to be paid at closing. And the IRS won't allow to do that. Or there are times if you need to refinance a property because you want to pay the IRS and there's a lien, the IRS will allow us to subordinate the lien to allow the refinance as long as they're getting paid, or putting you in a better position so you're going to have more money to pay on a monthly basis. Sometimes that's a thing. So a tax lien will not stop it, will not stop a deal. They just want to make sure they get paid.
Right. We did have a transaction close recently out in California, and it was California Treasury Department. They held up the sale, and the person selling owned a business that hadn't made any money, so he mistakenly assumed he'd have to file a return. And I think it's like the State Bureau of Incorporation that showed up in a title search, and then of course they notify the Treasury Department for California. It just starts a whole chain of events occurring. In any case, all he had to do was file the returns.
Yeah.
But he did have to pay penalty, because the guy said penalty is not to pay interest on any debt you may or may not own. It's because you made the taxing department's job harder because you didn't file. That's why they're penalizing you. They got to do a lot of extra work. Somebody's got to pay for it. That's what those penalties are usually for. Interest is on debt. Yeah.
Absolutely, it's a collection fee, and they're going to collect that money. Because you'll have situations where they didn't owe any tax, but they're still getting a penalty. And you're exactly right, Gary. It's because you force them to do all that work to force you to file the tax return. All that costs money. They're going to collect.
Yep. So I know my first year in business, I didn't do the quarterly returns. So I thought, why am I going to do that? I just pay when I file my return. And then I did. And then several months later, I got the notice say you didn't file your quarterly returns. And even though I didn't know anything, I still had to pay penalty on that. That was a long time ago, but thankfully I learned that lesson early on. So, hey guys, any other questions? And if you could please give Carlos a big pat on the back and or hand raise or a cheer or even a comment, because I mean, this subject.
Thank you. That was great.
You'd be surprised when you saw the statistics, how many people, I mean, it's, 1 out of 12 people will owe something or some form of collection, and 11 million haven't filed. And I mean, that means every one of us knows somebody. But with your clients, let them know that, at least with the IRS, I'm not saying for the states, for the IRS, don't run and hide. Have them call Carlos, all right? Get their mess cleaned up so they can buy or sell and you earn a commission. You have a resource that, let's face it, 99.9% of agents are not going to have. This is extremely unique. And I knew it was coming. And earlier than I know it was coming, the guy does my tax returns, his son left the business to go work for the IRS. And he said, just like Carlos told us at the beginning, because of the COVID years, they're in a huge major catch-up mode. But don't be surprised if you get some form of, and by the way, I've been audited 3 times. 2 times, they're all for information gathering. 2 times it was just one exchange of information back and forth, and I was done. I didn't get nervous at all. The 3rd time was a big giant audit. It took a year because I sold a big giant building. It was, it's a multiple 7-figure gain, and I had never had a year like that before. That big, usually 6 figures. But in any case, I got audited. It took an entire year. I never got nervous because I didn't do anything. I knew I didn't do anything wrong. I made a math error, but my tax accountant said he would cover that if that happened. At the end of the year, they wrote me a nice letter saying there's a net. I think what it says, Carlos, no net change or something like that.
It's a no change. It's
no change. Yep. Yep. And in fact, I was in California when it came through. I was looking at the Pacific Ocean and opened up the email my tax accountant sent me with the scan of it. I was jumping for joy, and
that's a good email to get.
Yeah. Oh yeah, that was good. And that was it. My entire life, 40 something years of filing returns, and that's it. So, any case, Carlos, thanks again, Mayor, for doing this. I know this was a big ask, and I really appreciate you sharing and also sharing the book. I mean, that's a very generous gift. You shared the contact information, and do you guys like this class tonight? I mean, I know it's unique, but wasn't this fun? I mean,
Yeah.
unless you're in trouble. it might be
Yeah, that was
so-
excellent.
Actually-
Thanks.
I love taxes.
Carlos, one more quick question before you go. Carlos,
Uh-huh.
one more quick question before you go. Do you provide services throughout the country?
Yeah, I'm literally worldwide. I would say 30% of my clients now are coming from overseas. So yeah, it's nationwide. The enrolled agent license is a federal license. So anywhere in the world, if you got to pay a tax, at least to the U.S. government, yeah,
All right. I wanted to make sure before you left.
yeah.
Thank you.
Thank you guys. I really appreciate you
Carlos,
spending some time with me. And
Carlos, I just want to tell you too. Grace Saliente is actually out near the Redlands. I taught a class out there in the Redlands several years ago. Two classes actually,
oh really?
and she shoots all you teach in the Redlands. Yeah, isn't that amazing?
Oh,
So,
crazy.
yeah,
Cool.
I just talked to her earlier today. What a coinkydink, you know. So
I think I drive by that office every morning. It's right there on Redlands Boulevard. I believe so. Yeah. So, well,
yeah,
thank you, Gary, again. I really appreciate it.
Yeah.
All you veterans out there, happy Veterans Day, and go enjoy your evening.
yeah.
Thanks again,
Okay.
Carlos.
Take care, guys.
Thanks everybody. You
Bye-bye.
guys have a good night. God bless you and all your loved ones. And I'll see you on Wednesday night for the monthly team call.
Thank you for watching this episode of Monday Night Live. Be sure to subscribe to our channel and go to realestatewithgarywilson.com to join our community and start building wealth today.